Should be live on the YouTube. Should be live in the virtual trading floor. Hope everyone's doing well. What's up, Pam? What's up, Moon? How's it going, Bandit? Hey, Eddie. Hello, Joanna. What's up, Josh? Hey, Tom K. Good afternoon, Nick. All right. All right, let's do it. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure is mainly unchanged. I did keep a little bit of this lucid against me as something just to kind of keep it on my watch list. But that trade worked great off the open and then totally failed and closed terribly. I'm also back in Amazon, small. I got back into Amazon, I got out of it, I got back in, and I've got a little bit of it. All right, let's go over to the videotape. So how did the market close today? SPYs are down 0.3%, Qs are down 1.1%, and the IWM is up 0.3%. So it's another rotation day where we saw selling coming into tech, big cap tech, and this IWM held in pretty well and still managed to hold above 180 support. So we got a little rotation back in favor of the IWM today, and that's after seeing some real weakness on Thursday and Friday where the Qs were strong again. Let's go over to the chart. I guess for the moment have the intraday chart up so we can start with this. You know, the open was exciting. The open was really exciting. We blasted off this morning, you know, really strong initial move from the market off of a slight, it was like a flattish to slightly down open. Qs here, you can see really taking off this first 30-45 minutes of the day. IWM, big time leader. This was something to be really excited about early on this morning. Just 4 or 5 really big, fast up bars in a row off of support. Speaking of support, you know, we're really finally getting down to this bigger support zone that we've been looking for this market to test, right? And we've been saying this since the top, since you know, June 15th, June 16th. The market got very ahead of itself. It got parabolic. For me, this was the first time I went net short the entire calendar year thus far for this pullback. And into this pullback, as we've discussed, even on this first pullback here after 2 days on June 20th, we got to the ADMA for the SPYs and the daily chart for the first time. And if the market wanted to keep the same playbook that it had kept pretty much ever since we broke out from SPX 4200, you know, pretty much ever since we broke out through this 418, 420 for the market, starting on May 26th, I think is when we really started getting confirmation. It's just been this really tight pattern of higher highs and higher lows. So if we wanted to keep that pattern, this could have been it. We could have put in a pivot low on June 20th into the ADMA, and the momentum could have continued, and we could have gotten right back up to new highs. But what we had discussed as a team at that point was that the move had gotten so stretched, and there were some underlying layers of probability that we were paying attention to that pretty much called for a bit of a deeper pullback in this market, or that more rest might be needed, you know, a broader correction through time or through price. And I didn't love the idea of starting to really get back long here on June 20th. That was more about, you know, starting to cover the shorts if you got net short, maybe starting to build back in real small on some of those longs just in case the momentum move came in. But we discussed that there was probably a higher probability of seeing a deeper time or price correction, and now we're getting it. I think that we're on day 6 now of the time price correction, and it's been through price and through time. Like, I know we've certainly pulled back, right? We've pulled back from SPY almost 444 down to SPY 431 or so. So it's been a $13 pullback in the SPYs, but it's been over the course of 6 days. So it's enabled this 21 EMA to catch up, or if you pay attention to Pat's technical portion of his note, it's starting to enable that mid Bollinger Band, that 20 SMA, to catch up to price a little bit as well. And this just makes sense. This is what we were calling for. I think I said it even back on the 20th, that the area that I really would want to look to start getting a lot heavier would be as the market approaches 430. That the 21 EMA can catch up to 430, because at that point it was still trading below that, right? Back at the market highs on the 16th, the 21 was at 427.50. So that's moved up, $2.5, $3 at this point. So that's part of a time correction as price is pulled back to it. So that's a price correction. So we're getting a combination of a time and price correction, a technical pullback over the course of 6 trading sessions as those moving averages continue to kind of float up and work their way higher. So for the first time now in this pullback, we're finally starting to get into the much bigger support level that I've wanted to look for, to see if this market could put in a bigger pivot and to potentially start getting a little bit more heavier to the long side again. So that's what I'm starting to look at. Pre-market, we touched 432, which is kind of the upper end of the range I've been looking at. I've been talking about 430 to 432. We touched 432 pre-market, had a pretty solid bounce off of that, 2 highs, especially we were just looking at the 5-minute chart. Really good move off the open. We got to 434.61. But then we kind of really died out in the afternoon, led lower by the Qs. Going back to the small time frame, I threw in the towel and really trying to press longs at 10:30. That's when the market told me that I should be taking a step back. Off the open, and we can look at the Qs and the IWM, which were both kind of trading better than the SPYs were. But off the open, SPYs, red to green, great initial move, little test of the 80 EMA on the 5-minute chart at 950. Market's trying to give continuation. Struggles. You get a shooting star here at 10:05. That leads to a 15-minute correction. You get this attempt of a pivot here at 10 a.m. Market tries to bounce off that, but can't make new highs, so you have a little bit of a lower high and a second tail. We come back in. We're still trying to support that area, but on the 10:30 a.m. candle, when we broke this low here at 10:10, you're losing all trend, right? So I think that's when I started to say, like, pay attention, pretty much to, like, the low of the day and the high of the day. Excuse me. Pay attention to the low of the day and the high of the day, because right now we broke this immediate uptrend. There's a very good chance that we just range out here. But if we break the low of the day or the high of the day, that maybe you actually get some continuation in that direction. And pretty quickly after that, the SPYs, and I know it wasn't confirmed by the Qs or the IWM, excuse me, pretty quickly at 1040, we triggered through the low. But I actually bought this because this was, that kind of more extreme small time frame extension where I like to sometimes come in on the other side for like a quick little trade. So I actually, even though I probably had just said if we break opening lows we could work our way down, I actually bought below the opening low, but that was just for a snapback trade to the moving average, and then we'll kind of see what happens. And we created another lower high there, and then we pretty much continued to deteriorate the rest of the day and had a very poor close. Pretty much closed on lows. So not a great looking candle at the end of the day here with us closing on lows, but it's just still part of this price time correction on the big picture that we've been looking for. So, I have no problem with the week close. I almost like it, and that's as someone who's long. I want the week close and kind of want a gap down tomorrow. If I could get a nice gap down into like 4:30 tomorrow morning, that'll probably be something, depending on the specifics of any news or whatever, that'll probably be something that I'll actually look to buy a little bit more aggressively, kind of for the first time since we've been in this correction. So in this correction, I've just been piecing back in real small on some of the stocks that I have sold at higher prices, reestablishing the position a little bit, but not doing anything too aggressive because this is what I was looking for. So if I could get that gap down into 430, maybe that's going to be the first time where I'll look to be a little bit more aggressive. So that's the SPYs. If you look at the Qs, similar price action. Qs were real strong in the beginning of the day, tried to create that higher low, failed, And it was really with this, like, 10:30, 10:35 a.m. move where it was like, okay, like, we're kind of shot now. Trend continuation from this opening move is not happening, is what this market is telling us with this deep pullback. Will today just become a range day, or will we break lows and actually have a complete failure? And I thought that the highest probability situation was actually a range day at that point, but we didn't. We totally failed. We broke opening lows with the lower high, with this bearish consolidation that broke down, and the Qs were particularly weak and particularly heavy, led lower by NVIDIA. I actually had a pretty decent long trade in NVIDIA. I was able to make a few bucks today. But Qs just ended up being really weak. And then the IWM held in. The Russell, not an ideal close. You would love to get rid of these last 4 or 5 minute bars in the IWM. But considering just how weak the NASDAQ was, again, the Qs here closing down 1.2% or so. It's actually where we are now, and that's with a little bit of a bounce since we closed. But Qs down 1.2% and IWM up 0.25%. It's not terrible, though you would have liked the little bit of a better close here. We're still holding above the key 180 level, even though we ticked below it pre-market. Really great opening move led by KRE, the banks, XLE, mid-cap, small caps. Pulled back a little bit deeper than I wanted here, 10.10, but wasn't the end of the world, giving like a 15-minute correction. We tried to bounce off that, but same deal. Once this 10 a.m. low broke, which happened at 10:30, even with the IWM being relatively strong, for me, the market was just shot. At that point, I feel like I don't have an advantage. So I'm not really planning on doing any trading the rest of the day, honestly, post 10:30, unless I get, one of those smaller scalping opportunities and something that becomes like very extended in one direction where I can try to come in on the other side. I did do a little bit of that. I made some money in TQQQ into the end of the day to the long side in NVIDIA when it really started to get stretched into those levels. So again, able to make a few bucks for myself, but none of that was spectacular necessarily. Started nibbling a little bit of NVIDIA around 405 on the way down. Pat had mentioned that a pull to 400 to 402 would make a lot of sense. So I added stock at 402 here, kind of worked the position versus roughly that 400 area. My sizing was appropriate for it. Finally got this decent bounce. I was all out by like 408, 408.50, something like that on the way up, but it was a pretty decent move. But that's all I'm looking for post 10:30. The market's giving me the potential of this nice looking uptrend in the beginning of the day. I want to see what I can get out of it, but I'm waiting for the market to tell me and to provide to me the signal that that's just not happening. I need to take a step back, and that's pretty much it. It's pretty much how it worked out. So there were some things to be excited about in the beginning of the day, and then the market totally failed. Lucid was a really big focus for me in the beginning of the day. I was very greedy with it. I traded it very heavily, and it was very disappointing and totally failed. I'm actually kind of surprised by just the degree to which it failed. Closed up 2%, but intraday pullback from $6.30 down to closing on lows at $5.60 pretty much. Considering that news, I thought that news was very significant. I'm surprised that they sold it to the degree that they did with that Aston Martin news this morning, with how beaten up this stock is. I feel like I have not been bullish on Lucid from day one. I thought that the stock was ridiculous, even more ridiculous than Rivian. At least Rivian, I see the cars on the road. I remember Lucid like trading, I don't remember, probably here and then here again in 2021, late 2021. I remember this thing trading at like $45, $50, and they had like produced 2 cars by that point, and the whole thing was just kind of absurd. And, who knows if this company is even going to be able to continue to exist. And for me, seeing an Aston Martin partnership come in where they want to license the technology and actually receive both shares in Aston Martin and cash, that's the first thing I've seen, and I'm not like a super close follower of Lucid, but that's the first thing I've seen that's been remotely legitimizing for this company since it came public. So the market certainly didn't help, and I'm never surprised to see a trade fail. But I'm kind of a little bit surprised, I guess. The degree of the failure, just how weak they closed this thing, wasn't good. They had that huge $6 seller there. So I had started buying some pre-market, and that's when I first recognized pre-market, that $6 seller. And they couldn't really clear it. Little volatility just above $6, and pre-market it seemed like it would clear above $6, like the seller would lift to get the bids to come in above, and then just would hit all those bids and come right cross the offer basically back down to $6 and jam the thing back down. So I was able to buy some pre-market. I did do an ad. I got a pretty good price on the ad at $5.86 on this first bar, kind of just averaging down on my position into the pullback. It got back up to $6. The seller was there. This ADMA was beginning to catch up. That seller became so clear and obvious. I was a little nervous at first, and I think I spoke with Cody about it. I was a bit nervous to put a buy stop at $6.01 at first because of the price action that I had seen pre-market, where the seller would lift. Like, if it's very clear and very obvious that the seller is sitting at $6, well, then you could just put a buy stop at $6.01 to enter the position. You know that the seller is gone because otherwise it wouldn't be able to tick above it, and then you could be involved in what could become a good trade once you know that the seller has lifted and is gone. But sometimes a good execution trader, and this is smart execution, the whole world after a period of time can see that you're sitting there at $6 and dumping stock. So what you can do is you can lift that offer, let all the suckers, if you will, kind of come in and buy at above $6. Let those bids come up to like $6.04, $6.05. Everybody, was buying you at little higher prices, probably on the way up. And then you can take your offer and just put it right back at $6 and cross down and kind of gather all that liquidity to continue to kind of sell your position. So I was a little bit nervous to put that buy stop in there, but they were applying so much pressure on the seller that first 15 minutes, and the ADMA was catching up, that I finally decided to put in a pretty big, like, scalping type ad at $6.01 that I was just going to use the ignition bar low for, which was, it turned out to just be 98 cents. So I ended up just putting my sell stop in at $5.97. So I was able to buy with 4 cents risk, right? And I got zero slippage on the entry. I know the stock trade's very thick, but I was surprised that I got zero slippage on the entry. I was expecting at least a few pennies. But I got $6.01 on the entry, put the stop for that ad at $5.97, and then the momentum came in. We got a pretty decent move up to $6.28, and then the market started really not helping at 10:30, as we're aware. This stock was trying to hold in. It was really trying to give us a strong pivot low off the ADMA at 10:20, but that started to weaken out at 10:40. It never kind of recovered. It pushed lower as the market was weak. For people that were trailing, we talked about that you could use the 950 low as a trailing stop. I was sticking with my original stop losses, so I got stopped out of some stock here at 10 after 11, and then my real stop for my core position was below the low of the day. And then I decided to keep just a feeler, just to kind of keep it on my radar and watch it, because I felt that news was so significant that I wanted to. And that feeler just bled out the whole rest of the day, which is the interesting part, that they were able to sell this thing almost back down to flat, pretty much down to all-time lows, even after what seems like significant news. But if you manage to trade well, even if you were really greedy, you should be able to be at least break even. And that was kind of me. I was being super greedy with it because I felt that there could be, I really like the reward potential of the stock. So I didn't make, very much on this thing when my stops were, getting triggered there. But I'm fine with that. It's the game plan I was going for. It's risk reward. I wanted to make sure, if it moved to 6 quarter, that I wasn't going to lose anything. But I wanted to make sure also that if I could get a move to $8, $9, $10 over the course of a few trading days, similar to what happened with, like Carvana on that move here. I remember after hours on the Carvana earnings report, buying stock at like $8. The next day was a little bit sloppy, but still closed well enough for me. And then within a few days after that, you have a move up to over $13. It's not impossible for Lucid, which does not have as big of a short flow as Carvana, but still, 10% or so. when it's this beaten up, it's not impossible to see Lucid do something similar and get back. You buy the breakout at 6, it ends up going to 8, and that becomes a really good trade for you on size. But obviously ended up failing, and just kind of is what it is. So that's pretty much it. KRE was another good one from this morning. That was a decent trade for me, and the market ended up, making this thing a struggle. Well, I felt that KRE could be relatively strong today. Well, first of all, it was relatively strong even pre-market, but there was that news with PACW that had PACW up a lot. So I thought, all right, maybe KRE as a recapture trade of $40 could be pretty good. This thing gave a great opening initial move through that $40 all the way up to 40.77 or so. I sold some stock at about 40.75, which was a pretty good fill into that move. And okay, fine, it's a big move. It weakens out a little bit. It pulls back into the space between the 8 and 21 EMA. This is not the end of the world, but you need the pivot to come in here at 10.05. And then it kind of failed lower. It held 40, previous resistance to support, but that pullback was just too deep, and then it was kind of just dead money for the rest of the day, along with the market that wasn't doing anything for us. But it was still a pretty decent one early on. And I guess that's pretty much it. It pretty much kind of covers my day. It covers the market here a little bit. So I hope everybody had a decent day and recognized that relative strength. And it's one of the harder parts, I think, about trading generally, but it's so important, is to really have an understanding of when you have an edge in the market and then when your edge disappears. And that's why, like, when I'm reviewing the market, that's what I try to emphasize when I'm reviewing the market. When do I have an edge? I have an edge off the open. I have an edge with how the market was moving in the beginning of the day. I have an edge where there's a possibility of trend continuation coming in off of, like a day 6 price correction down to the downside as we're finally getting down into the support levels. Like I thought we might need a little more time still, to be honest, but it would not have been surprising at all if the way that this market's pivot comes in is by a pre-market retest of 432 and then really good strength early on in the day. And it's all in the beginning of the day there where the market's telling me, hey, you've got an advantage. Hey, you can push things. Hey, you can go for it. Hey, you can look for the trend continuation trades. You can be involved in a breakout like the Lucid breakout, and you go after it. But then the other key factor is that you got to recognize when the market is telling you that it changed and you're not able to get that continuation, you don't have the same degree of an advantage, and then take a really big step back. And that's what happened at 10:30 today. And I just think that the ability of a trader to recognize that and trade when they have an advantage for that first hour today when we had one, and then recognize at 10:30, ooh, wow, it's changed here. I don't have that advantage in the same way. Let me take a step back. It's a big difference on how your overall P&L and performance is going to look. Because if you continue to trade a lot of times is midday price action, or you continue to trade after the market is telling you that it's failing or that it's not working, and you continue to try to push it, that's when you lose money. That's when you give back a lot of money. But if you're taking the trades in the beginning of the day when you have like a much stronger advantage and everything is still in place, then that's when you can make money for yourself. And you still don't know what that full result is going to be. You still don't know, there was no way to know at 10 a.m. this morning when the markets were all looking great, if we just need a little bit of a rest here, and then maybe we get this pivot low at 10.10 that leads to new highs, and then we get above yesterday's high and we get a move to 436, and your longs just continue to pay you. There's no way at 10 a.m. to know if that's going to be the scenario, or if you're just going to get this move to this area and then we're going to go sideways the rest of the day, and you kind of just digest the move for the rest of the day, and at the close you're like, do I have a big enough of a profit cushion to keep some? Or if things are going to totally fail and they're going to stop you out. But at 10 a.m. is still when you have the advantage to go for it. At 10:30, the market's told you. Scenario 1's not happening. Scenario 2's probably not happening. We're breaking lower. We're breaking areas that we shouldn't break. So if you're going to continue to push, post 10:30 or post when the market's telling you not to, how are you going to expect to have the results, right? So, yeah, just kind of a lesson from the market there. So that's all I got. And I am happy to answer any questions or take a look at anything that you guys want to take a look at. So, first thing here I'm seeing is from Dave S. Hi Derrick, I've been dabbling in trading futures and I wanted to share a trade I took and hear your thoughts on it. At 11:34, I got no charts to be able to pull up for this. At 11:34 Sunday night, I shorted the ES at 44.01 based on a signal I am using that said the market was going to roll over. The risk on the trade was 2 points to 42.0250 being resistance based on the previous 4 or 5 minute candles. This trade started to work by 12:30 and I was able to kick half to cover risk and keep the position overnight without worrying. I went to sleep. That's probably smart. I went to sleep and checked back in when I woke up after Europe had been trading for a few hours to find that I had made over 12 points. I closed out of the trade before the market opened in order to get flat. The big question in my head right now is this. When trading futures, is it correct to take profits between the U.S. market opens, before the U.S. market opens, and does being up that much relative to my risk affect that decision? Sure. So I would say that if you're gonna trade it at that time of day, if you're gonna trade those hours, then you should trade the exact same way that you would trade any other hours. Honestly, if you're trading technically, your edge is the same, more or less. Like you found a technical setup at 12:30 in the morning. That same technical setup could have been at 12:30 in the afternoon. There's probably less volume going off in the middle of the night and less liquidity. So that would be one thing that I would keep in mind. But for the most part, you're taking a technical trade based on your edge, so you should be implementing probably the same game plans and same strategies that you would use normally. So if you covered half your position and then let half the position ride, you're in a win-win situation at that point. I totally support that. The only thing I would say personally, and this is just me personally, is get some sleep. Get some sleep. I'll tell you, it's funny, I spoke to someone on a call today, and this was, we were talking about crypto actually, but my nightmare is the equity market becoming 24/6. I don't want that. I love knowing that, like, I can't, like where the futures are trading have no real bearing on me because I can't liquidate my positions anyway. So like I don't look at the futures post 8 p.m. at all, 8 p.m. Eastern time, right? Because that's when our after hours trading ability ends. I've learned years ago, I just stopped doing it because the times when it's like bedtime and I'm going to bed at 10 o'clock or whatever, and I go, oh, let me just check to see where the futures are real quick, just to see if maybe I'm going to get a move tomorrow morning in my favor, a gap in my favor, or not. Let me take a look at that. The times I've done that and then not been able to sleep, it's just useless for me because I can't liquidate the position anyway. So for me personally, I've learned long ago that I would rather not know, and that doesn't mean that I don't look at like market research at night. I do. I'm more likely to lie in bed and read a research report on a company, but not look at the futures because I like to sleep. And for me, trading is a performance-based activity. And it's funny, this is something I was just chatting with my wife about yesterday or whatever, because she was talking about how she gets really busy at work sometimes in meetings or whatever, and then like she'll like not eat lunch or forget to eat lunch. No, that's not me ever. I'm so regimented about sleep, breakfast, vitamins, lunch. You see me at the same time almost every day in the VTF around 11:30. Guys, I'm gonna go grab some lunch real quick. Like I schedule that into my day. I have that scheduled into my day. That's all part of my process because I need to be at 100% every day. Which doesn't mean that I am at 100% every day. Every once in a while, Pat comes to New York to visit and makes me stay out past my bedtime and have you know, one drink more than I want to have, and then maybe I'm not 100% the next day as a result of that. That certainly happens. That certainly happens. But I know traders who, like, especially some of these FX folks, who like have alarms set up on their computer to wake them up in the middle of the night because there's a trading opportunity. Oh my God, I never ever want that. I never ever want alarms going off in the middle of the night so I could trade. I don't want the money, honestly. Maybe like a very, very rare occurrence or something like that, I'd be interested, but I need to not go insane. Okay. Yeah, I also do get up pretty early to start my daily research process. So I'm usually up somewhere between 5:30 and 6:30 Eastern to start that research process. But that's my for me, that's my needed preparation in order to be prepared properly to do the morning meeting at 9 a.m. Which way on Baba? Looks down a little bit. So yeah, Dave, support the trade there, support the process. I would just say get some sleep. From Pam, I have a question about extension and trading the Chevron bull flag on the 5. Sure, so we communicated that one today here. And I think someone communicated the long off the 10 a.m. bar, which I liked. Off this little pivot of the bull flag into the ADMA, which I liked. It didn't work, but I liked it. I tried it as the ADMA and the 5 was catching up at about 10 and gave it a little room. Energy was strong and the market looked good. And I liked Chevron. I like that Chevron was not that extended on the 5. It went sideways until the 15-minute extension came into play and then stopped me out on the 15-minute correction at around 10:30. How do you handle a situation like this? Sure. So I'd be curious to know how you chose your stop loss. You mentioned that you gave it a little room, but I'm curious to know, like, was that a random amount of space that you were giving it? Was it based on something that you saw on the chart where it made sense for you to give a certain amount of room? So, typically when bull flags are going to go and they're going to give continuation, they give continuation as the ADMA on the 5-minute catches price. And it's very typical, and this is why I liked the long off the 10 a.m. candle. It sounds like you got in a little bit earlier when you saw the ADMA catching up. I find it very typical that whatever the low is of a bull flag as it's first forming, I find it's very typical that actually breaks quickly before it begins to go. And that probably makes it even easier for it to go because it shakes out some momentum traders perhaps, maybe even suckers in some shorts, and then it actually goes. So that's why I really like this 10-10. And usually that shakeout happens like before the ADMA has fully caught. So people that are buying like real early, like at the 9:55 bar, let's just say, or the 10 a.m. bar, let's say, which maybe that was you. Sometimes they'll have their stop in at the 9:50 bar low, because that's, and it sounds like you didn't do that, but they'll have their stop at the 9:50 bar low because that's the low of the flag, but the ADMA didn't catch it yet. So those people get shaken out there when the 9:50 bar low breaks, but that's really when a quick little slightly lower pivot comes into the ADMA. And then I like when you get a quick close back below that first low. So that kind of signifies that they just shook people out. And then you get the continuation. So that's actually the trade that I really like. Is waiting for like this 10 a.m. shakeout to occur, waiting for the price action to really kind of be touching that ADMA, and then getting involved. And I think someone called that out, and I didn't get in it specifically because I already had stock and I didn't want to add to my position. But that trade I like, and that either way, whether you did it the way that you did it or you did it the way that I'm describing, the thing fails. It decides that it wants to do a full 15-minute correction, which is fine. That happens, and then you get the 15-minute pivot, and then you actually get continuation. It doesn't mean that the trade that I'm talking about is a bad trade. It just means that, in this circumstance, it wasn't ready to go yet. It probably didn't help that that's when the market was also weakening out, right? This 10:30 a.m. is when the market was weakening out, and this is pulling this, even though it's the strongest name and still continue to be strong, it's pulling this thing back a little bit further. So yeah, I mean, that's kind of the thought process on it. I don't like random amounts of risk. I don't like the adding random amounts thing. Because then, how do you choose it? Like, it's very easy to choose a random amount and be off by a little bit and get shaken out and have it work anyway. So I always want to choose the absolute low, or to be 100% honest, there might be another circumstance where I just don't have a stop in. Like in the very beginning of the day in Lucid, I didn't have an actual sell stop in. And this goes back to something I say a lot, which is that I have to balance when I'm working with a team like you guys of what I think is the right thing to do and what I do, because sometimes they're not always the same, and what something that I do or that might be the right thing for me might not be the right thing for everybody. So like if you're a new trader, if you're a small trader, if you're a small account trader, I think you have to have a stop in for everything that you do. I'm not a new trader. I'm not trading in a small account. I can be light in a position and not have a stop loss, whereas a newer trader with a small account can't do that. So for me, I either want to have that hard stop in place, which is what I probably would have done on Chevron off that low, or I'm taking a trade where I don't have a stop in place, but not having a stop in place doesn't mean that I don't have risk management in place, to be honest. It means that I don't know what the hard out is yet, but I have a specific set of things that I'm looking for, where once I see those, they will define what my hard stop is, and I can be, because of my sizing, a little looser with my risk and enable that to be okay. That's my feedback for you there on Chevron. I appreciate the question. From Steve. Do you have a similar view on Meta as SPY? Wait to get long around the 21 EMA. So one thing I would say, and I think that might have even been you mentioning this at one point, Steve, and it might have been with Lucid, where I think maybe you said I have a stop at the 21 EMA. So I don't use moving averages as stops or buy points ever. I use them as tools, and they measure equilibrium for me. So it might coincide, like the SPYs here. It happens to be that the lower band of equilibrium is support, right? Is at support. It's not that the 21 EMA being here doesn't create support. 430 is support, and the 21 EMA now is at that price. So it's like an extra piece of information. I like that. I like that the equilibrium zone or lower band of it is in conjunction with the level that I actually want to pay attention to. But it's kind of like the level comes first. That's almost like what's more important to me than the moving average itself. So it'd be the first thing I would say as we look at Meta. And when we're looking at that space between the 8 and 21 EMA, that's the equilibrium zone, right? So in a really strong market, you might get your pivots above the 8 EMA or at the 8 EMA. In a little bit of a weaker market, it might be in between the 8 and 21 EMA. It might be after 21 EMA. You could go below the 21 EMA and snap right back, right? It's just a tool. It's a zone. So I would want to utilize an understanding of, well, if Meta gives a time and price correction, what does a time and price correction mean for Meta? It means that the stock should trade somewhere between 280.64 and 271.24. That's the 8 EMA and the 21 EMA. That's my technical equilibrium. So when I'm in that zone, that's where the equilibrium is that we should be pulling back to actually get a pivot broadly if this thing is going to succeed. And like I said before, that could even include overshooting the 21 EMA and then giving upside continuation. For the most part, there's a couple little pivot lows here on the way up. A really big one is the low from June 8th that you don't want to see this thing lose if you're a bull. You got a little bit of a pivot here at June 14th as well at like 268. There was even a little bit of a pivot right here of the flag type pattern that it's now creating at around 276.22. I just want to pay attention to those levels in conjunction with equilibrium. Like, this is a really big level down here at 258.88, 259, let's just call it. But at this point, if this thing's getting all the way to 259 with the 21 EMA at 271, it's almost like something's wrong. When you hear me talk about intraday, like, oh, the pullback is kind of too deep now. Like, this pullback is deeper than I want to see it. Like, this isn't great, which is exactly what I was saying on the small time frame with the SPYs and Qs today. Starting at 10:30, that 10:30 was the signal to me that this market's not going to be able to give me the trend continuation that I really want. And that's because look at the pullback in relation to roughly where this equilibrium area is. This isn't the end of the world to me that this 10 a.m. candle tail low goes below the 21 EMA. That's not the end of the world. But the fact that now I'm getting below it and holding below it, that becomes much more problematic. So going back to Meta, going back to the daily chart, I want to look at the levels that Meta has created historically in conjunction with this equilibrium area to see where a deeper pivot could happen, but the stock itself is still healthy, right? So, if I get a pullback to, let's say, 270, which roughly coincides with the June 14th low, which should be some support, but it's a little bit of an overshoot of the 21 EMA, and I can get a quick snapback off that, almost similar to what I just pointed out from the 5-minute chart of the SPYs today. That's fine. That's an important area that I can look at. And yeah, there's going to be big support where if this thing really starts to fail, that I will take a look at this big support level at 258.88, but something's wrong if it gets down there, right? At that point, for this thing to get 258.88, there's a good chance that it's already built out a full-on reversal pattern up here, and that you're just having a much bigger problem as it gets to the support level. Which, again, doesn't mean that I won't look at the support level as a bigger, percentage. At that point, you almost start looking at your fib retracement percentages to see how far deep we can go. But the difference between this thing getting down to 270 and then creating a pivot low and snapping back up, and the difference between this getting to 258 and then snapping back up, is that if it gets down to 258, it's almost going to have to reverse higher. If it gets down to 270, 272, it doesn't have to reverse higher. It just has to pivot and continue. I think that probably makes the most amount of sense of the point that I'm trying to get across here, is that at some point here something's wrong, and it's going to have to really prove itself by giving a full reversal back higher, as opposed to here it's just a deeper pivot that gets created. It finds support at the lower band of the equilibrium area, which makes sense given all the other factors that we've been discussing recently, that we should be seeing a deeper pullback and then coming back in. So I hope that helps with your question, Steve, and I hope it helps you kind of understand a little bit better how I look at the markets and how I look at the technicals here with these situations. Yep. You see a lot of Lucids. Air. I guess that's the type of car they got on the road in the Bay Area. I've only ever heard of anyone seeing a Lucid who lives in California or Florida. I'm yet to see one. I don't think I've heard of anyone seeing one in New York here yet. From Ben, I was super greedy. I think you're talking about Lucid. So I made a tiny bit, but I'm fine with it. Didn't lose anything and had potential for a big move. Yep, that's the right thought process. From Tom K. Lucid not showing a green E for me for shorting. No, yeah, it's hard to borrow. How do you handle orders when you buy and have a stop immediately, and then also have some limit orders to sell on the way up? I don't think it allows for me to put in orders like that. Trade support might be able to make a small setting to allow a little bit of breathing room with that if you ask them. Probably more of a Pat question than a me question. But 2 is, I just need to constantly adjust the stop. Or in this case, I actually didn't. So immediately I didn't have a stop. I just had the offers out. And then when I took the ad, I'm managing adjusting the stop. I was changing my, the stop that I had on the ad where my stop was at 597 for momentum. Every time I sold stock on the way up, or I needed to sell stock on the way up, I canceled and adjusted my stop loss. So let's be quick with the keys. Scrolling down here. Ben, I assume we're talking about Chevron there now, about the pivot that we're just talking about. Gotcha. Good stuff, Steve. Let me see if there's anything on the YouTube. Ooh, we got a bunch of comments here on YouTube. From Mike, hope you and the VTF are all doing well. Thanks, Mike. From Chi, if stocks gap up at the open, then retraces back to the EMAs, and the trade is long either at the gap fill or catch up with the EMAs, is this a counter trend trade intraday? I don't consider it to be, no. Since it is a trend down, and it's not a trend down. It's not a trend down if it's at the open, right? Stock gaps up and sells off to the EMAs or the gap fill, and then you're looking for a pivot. That's not a downtrend. A downtrend would be a pattern of lower highs and lower lows coming in that takes a period of time in order to actually get there. So I don't consider that to be a downtrend. No, if anything, you're looking for the pivot to come in that creates the uptrend off the gap fill or off the equilibrium area. Would taking a 1, 2, 3 trade setup long in front of resistance have less probability of success versus resistance being further away? Maybe. So basically the question is, it doesn't really matter if it's a 1, 2, 3 trade or whatever it is, you find a bullish technical pattern that you want to go long on, but it's right in front of a resistance level. So does that mean that it has a lower probability of success because you're buying in front of resistance? The answer to that is yes. But the flip side of it is that the resistance has a higher probability of a breakout because of the bullish pattern that you found beneath it, right? So that's usually the way that I like to look at it. I usually like to look at it like, here's my technical setup. It's right beneath this big resistance level. This technical setup, I can take this, and it has a higher probability of the actual level, the actual resistance level, breaking and giving that continuation. And in which case I can get a jump start on a breakout, and if I can get the breakout to actually come in, then I'm going to be looking great. Right? If the breakout can actually come in, then I'm going to be looking great, because that can become like a further self-fulfilling catalyst that comes in. So I actually really like those trades if the other layers of probability that are there when they're in front of a level, even if in theory it actually reduces the probability of success of that small pattern. But you need to pay attention to, is the market on your side? Was there new, especially if I could take what we're describing right now and have a news event with it, or have really high volume with it, I love that. From Chi, since the price is driven by the imbalance of supply and demand, simply put, is the price moving because of supply and demand imbalance at a specific point in time, or more throughout the day? I'm not sure I fully understand that question, but if you're looking at stocks moving at any particular price, it's going to go up because more people want to buy it than sell it at that price. It's going to go down because more people want to sell it than buy it at that price. I'm not sure if that's exactly what the question was. I guess I'm trying to understand if there are ways to spot the supply and demand imbalance throughout the day as a whole. I mean, that's what we're doing when we're using technical analysis, right? When we are doing technical analysis, we are literally studying the supply and demand balance at different points to try to identify if there is underlying demand that's kind of coming in, overhead supply that needs to get cleared out, and then making decisions based off of that. So I appreciate the series of questions there in the YouTube chat. Chi. Back over on the VTF, it doesn't look like there's anything new there either, so I will wrap things up. If you're in that YouTube, give it the thumbs up, and I will see you all tomorrow. Have a great night.